Hi everyone, I want to give you a quick stock market update for this very busy week. Well, what do you see there? You see the price earnings ratios of a variety of major stocks. Now, one major problem that you see over there is that there's a lot of reds. That means that the share price per unit of profits those companies are generating is quite high. The share price is high, it's overvalued, and energy is an exception to that. So are some of the medical companies, and so are the diversified banks, insurance, so some of the financials basically. But there aren't many exceptions. In tech, Meta is up there, drug manufacturing. You've got, Pfizer up there as well. But there's still a lot of red, which means still a lot of valuation. It's getting better, though. More greens in semiconductors than there have been in previous weeks. This is the weekly performance of the major markets. You can see Apple and Microsoft and all of these. They've not had a bad week at all, actually, despite those valuations. But it does suggest that what we're seeing here as a rebound may not necessarily last. Sadly, the more undervalued ones have been the ones where the profit takings happened, as you can see with the energy companies. What does that mean? Well, it means given the overvaluations. I'm not going to go in just based on momentum. And given the undervaluations, there may be an opportunity to buy into energy, but let's wait and see. Now, this is a measure of price earnings growth ratio, which is a different way of looking at valuations. And what it does is, if it's below 1, it suggests the companies are undervalued. Again, energy comes up there. Some of the financials come up there as well. Some of these consumer companies as well. So a bit more green than we've seen in previous weeks. That's positive. Now, for those of you who don't recall, when I do the due diligence on the individual stocks that I'm looking to buy, it is each of these factors that I look at. For valuation, it's price earnings, which we've just seen there, price earnings growth. There are others like price to book, price to sales, discount cash flow that you can see there as well. But these are the ones I focus on. You can see growth here, sales, earnings, cash flow growth, dividend income, momentum, how's it moving, the trend, and a variety of statistics I'll look at as well. The whole point of doing due diligence on all of these factors is you're not then gambling with inadequate information, and you're equally not gambling on just one factor alone, such as momentum or growth or valuation. I want all my stocks to hit all of these. What happens when they do? Well, you get, and we tend to hold for 12 months, and last November was probably the best 12-month period of last year, of all the 12-month rolling periods we had, where that was generating 54% returns. Of course, we had a tailwind that helped and gave us over 12 months some of these. After 12 months, we get rid of the stocks anyway, and Crocs, after our 12 months had finished, everybody else started selling it as well, and so it's gone down. But that doesn't affect us because we'd already sold, because we hold for 12 months, or if the stock drops 25% from the peak. So just something of a reminder. And that being the case, can we get more of these this year? Well, obviously with headwinds, that's going to be far more difficult. And whilst it is far more difficult, and these are some of the Nobel Prize winners whose studies we rely on, don't feel that you should therefore go into let's just look at what's been performing well last year or which funds did. That won't help. As a former visiting fellow in business at Corpus Christi College at that university, these are some of the pieces of research I used to share with people and the mistakes they used to make. So where are we on the S&P 500? Well, there is on a weekly chart something of a bottoming down, even though it's only at what it was last April. So it's only back to where it was point last year. However, the monthly chart still shows a more sharper decline. Look at that monthly MACD. That's falling. If you imagine that's a rocket, it's falling quite sharply, whilst the stochastic, which tends to be premature on the monthly, might hit bottom around here. The MACD, I'll still have to wait for the monthly, I'm afraid. Now, I wanted to share some of the charts of some of the more popular stocks like Apple. It's not going to do a V-shaped recovery, but if it did by the end of the year, you'd be up 32%. I don't think it's going to do that. All these Bs and Hs, they're when analyst banks on those dates have given buy recommendations, okay? Microsoft, similarly, still on that downward trend. It might start to move up. I've drawn this upward trend there, and you can see in the last couple of weeks it's just starting to form something of a base, but those monthly MACDs, which are these top ones over here as opposed to the weekly ones which are there, are still pretty downward base. That looks like a base on the monthly. That's on the stochastic monthly and then the stochastic weekly, and it looks like it's bottomed out. However, this is what worries me. The monthly MACD still looks quite sharply falling. So this might go sideways for a bit before it moves up. So I'll wait before getting back into Microsoft. Similar story with Amazon. I'll wait before getting back up and getting my 65% return. I don't think in a year it'll do a V-shaped recovery like that. Might even take 2 years, but 65% over 2 years I'm willing to take. Meta, similar kind of story with that one. You can see it's a bit further down the line, and you can see why when these stocks look like they're going up, they're actually continue falling. It's because that monthly MACD gives it away a bit, and you can see with Meta where that had happened. Costco's another one that I like, seemingly again flattening and now starting to form something of a base. Would give me a 34% return if it continued upwards, and it does tend to hit that trend line and just sort of kiss it and go up and kiss it and go up, and it's been doing that since July 2017. Okay, so for quite a long time as well, and we're at that base, and it looks like we might bounce up again. So if we're right, that should give us about a 34% return by the year end, but I'm just going to wait another week before that one. Similar story with PayPal, something of a base, but still I'd say give it a week before we see that MACD and then reevaluate. Might need to give it more than a week. I wanted to show some of the other companies and just sharing these with you, because again you can see for yourself that those MACDs are still quite downward momentum. So whilst you might get 1 or 2 weeks going up, that's really probably not going to hold true. Johnson & Johnson sideways, and you can see it's going sideways up, moving along that upward trend line, so it's a bit better. Some of the energy companies rising up and then falling back down, so they've been a bit disappointing in that they give us great return, but because we have a 25% from peak stop loss, that is when it drops 25% from the highest it's been since we bought it, we have to get out. We have to get out of Coterra. Similar story with Halliburton, unfortunately. Whilst it did give us that big rise up, it gave us a 30% return, then dropped back 25% from the peak, we ended up fairly flat, make a couple of points. But because they rose and then fell back again, we've got to get back out, I'm afraid. Marathon, Occidental, which Warren Buffett got into, you can see that's what he's probably expecting it's going to do in the next 11 months, just continue rising back up. The danger is with all of these at the moment is it could drop another 30% and go to the lower trend line. And that's the same old story with many, and that's the risk you're taking at the moment of being in the market and not being patient. Mosaic, another classic story of rising up, back down, had to get out, because you get out if it drops 25% from the peak. Unfortunately, it did. And that's the danger of the markets at the moment. They might give you months after months of quite sharp rises, and then they're coming back out. And you might say, well, no, it's going onto a trend line and will continue up. Well, then you run the danger of taking even bigger losses if you do hang around. And Marathon Petroleum, Devon, all similar kinds of stories on the pullback. You can give all sorts of explanations of why those pullbacks have happened. Recession, profit taking, could be either of those. But from what we can see, we don't want to stay in uncharted territory where they're still continuing to fall. Yes, it's been a pretty bad, well, since 1970. The S&P 500 has dropped the most in the first 6 months. So not good news, is it? Walt Disney, a special situation. It's back to 2015 levels. And were it to go back to its all-time high, you'd double your money, even if that took 5 years. Doubling your money in 5 years is not too bad. So that's a special situation, slightly higher risk, but I like it. Don't forget my summer school, alpeshpatel.com/Spain. alpeshpatel.com/Spain. 2 intense days. We're also going to have dinner and coffees and breakfast and all that together. And the advantage of that is we'll get to know each other, but over those 2 intense days, and an online program which you'll have for the rest of your life as well, which will be updated, you'll be with me really learning about trading and investing and absolutely everything that I know, which is listed here. I mean, this is just a snippet of all the stuff you're going to be learning, and it'll probably save you about, I don't know, 500 hours of trying to do it yourself as I explain and teach you all of this instead, okay? And I think a lot better way of doing it than trying to just muddle through for the rest of your life by yourself. So do have a look at alpeshpatel.com/Spain. You'll see a phone number you can call up as well for booking help and arrangements you might need. Thank you all very much indeed. Oh, I've got a few more stocks for you. So this is on the trading side, pipspredator.com, on my trading algorithm. those are some of the things I've been looking at. And you can see some of the indicator, some of the main indices that I focused on, and stocks, IBM, Amazon, and the like, Facebook, and which ones have given us the best trends. That's on pipspredator.com. Thank you.